Here comes our learning objective 5, which is use the activity based costing to compute product and customer margin. That is very important, and that's the beauty of ABC, that you can separately find out what is the product margin, like in our Baxter company's example, how much is the profit for Sure Start and how much is the profit for Long Life. And with the customer margin, we can easily say that what is the Acme auto parts profit, what is that customer Acme auto part is giving us how much profit, right? So one of the most common management reports prepared with the activity based costing data is basically product profitability report, that is the product margin calculations. So the first step in computing the product margin is to gather each product sales, right? Each product sales and direct cost data as well. So we have given the same company's Baxter batteries that sales of the Sure Start is $31.3 million. Sure Start, lifelong or long life, it's 18.7 million. So total sales are 50 million. So we are given the segregated data. So the direct costs, they are that 9 million is the direct material on Sure Start and 6 million on the long life, so that totaled 15 million. Direct labor is 7 million, 5 million, total 12 million. Shipping cost is 2 million and 1 million, total 3 million. So let's prepare our product margin calculation or management report, in which you find out that what is the product margin. So we know that from our ABC data that our customer order cost is 1.808, our design changes are here 0, order size is 3.120 million. So here the long life, we have customer order 2.712 million, design changes, yes, it's 3.04 million, and our order size is 2.080 million. So totaled this amount, right? Can you find out its margin? So sales minus all the data here, you can find out its margin, right? So its total margin is 8.373 million, whereas the long life, it reports a loss of 1.132 million, right? So by segregating the data, ABC can also helps us to prepare the management report to find out that which product is giving you profit and which product is giving you loss. And how are we gonna do that? Through first stage allocation, we find out cost pools, and then from cost pools we can find out activity rate. From activity rate we can from activity rate we can easily find out that how much customer is giving us profit and how much and what are the product profits or margin, right? This is how we're going to use our activity rates to find out how many products or which product is giving us how much profit or how much loss, right? So this slide is basically reconciled with the company's net operating loss. That is, if we segregate our profit and loss, we just added our sales 50 million, our total cost by adding both batteries cost is 42.76 million. So the product margin total is 7.24 million. So our customer relations and other, when you add it, so total loss gonna be 2 million loss. So on overall business scenario, on income statement, the net operating loss is 2 million, but by management reports we can easily find out that Sure Start is giving us a profit of $8.72 million, right? Whereas the long life is giving us a loss of 1.132 million, right? So in that case, you can say that the department or the person or the people who are making Sure Start, they are contributing to the profit side, while the long life, they are contributing to the loss side, right? Similarly, we can also find out the customer margin. So we are given the sales and its direct material data or direct cost data. We can easily find out how much this customer is giving us a profit, right? So through our previous slides example, we find out that how much is this acme overhead cost, that is 12,000 something, right? So we know that here this customer sales are 29,200, direct material cost, these are our given data. This is we just calculated in our previous slide. That customer relation cost is, because this is one customer, so one customer relation cost is $15,040. Order size is based on machine hours, so we just find out that is 448 multiplied by 6.5, right? And product design, there are 4 orders that are for long life, so we just multiply the product design with the 4 orders. Customer orders, how many orders are given? 12 orders, and for 452, right? We can easily find out that one. So in that case, we found out that this customer is giving us how much? Only $384 profit, right? Why this is 28,816? Because it also include direct cost as well. These 3 direct costs are also included, and these costs are overhead costs, which we calculated through our ABC, right?